Hi there, you're watching Your Trades on ET Now. This is Priyanka Pal along with me, Snehi. Red is the center of the color, but then that's what we saw on the Indian markets from last 2 days. Sea of red, barring few of the sectors only. We talk about only the defensives like FMCG or IT and to some extent, of course, the pharma. These were the ones which managed to close with slight gains or marginally flat. But otherwise, it was a good sell-off on Indian markets, what we've seen. It was a clear-cut direction. The VIX did not move much today because the market started to move towards the downside as soon as they started to open. We've closed near 24,200. Bank Nifty was down by 650 points. Clear southbound move what we saw. The deep cuts coming in from spaces like PSU Bank, metal, commodity, these were the ones which were hammered the most. And of course, let's not forget, because a lot of macro data which is on the tap for this week, the key decision which has to come in from Fed officials tonight, and what we react on it tomorrow. The kind of move we've seen on US markets also. We are mirroring this same kind of moves now. Asian markets were also not doing that strong. In fact, they opened with a slight mixed set of cues, but then later the kind of cues, the kind of pressure started to weigh on Asian market also. The trade data which came in from Japan, that was weighing on Nikkei also. And of course, BOG also has to meet this week to talk about, to give decision on the interest rate. But then yes, dollar index move, and of course the Fed rate, Fed comments, what kind of direction, the runway Fed officials have to say. This all weighted on the market. We are clearly not just in a consolidation phase, clear-cut downward move, markets traded with pressure. And of course, couple of stocks like Veta Quabag, 11% down. It was just that because one tender, which was a significant tender for Saudi, that one got cancelled. Stocks were reacting to the news, Nehi, what we saw clearly.
Absolutely. Veta Quabag, one of the biggest losers on the street because that 2,700 crore rupee was the tender that came in from Saudi, and that order has now been cancelled. So we'll see what the company has to do going ahead. There is chatter on the street that there might be another tender opening and the company might bid for it as well. But we'll just have to wait and watch how that stock reacts. Another couple of stocks that were in focus today, another group rather, was the cement space, especially because of Ambuja Cements and Sanghi Industries. Sanghi Industries was a stock that was deeply pressured in today's trade. Let's pull up Ambuja Cement because that's the stock we're talking about. That stock has also seen roughly half to 1% cut. Sanghi Industries, 11.8, roughly 12% cut coming in on the back of the update that Ambuja Cement is going to be amalgamating Pennar as well as Sanghi Industries into the parent business. The share swap ratio is something that the street did not like, so on the back of that, deep cut coming in for Sanghi Industries as well. And lastly, of course, Cipla was in focus. The pharma pack, like Priyanka mentioned, one of the few packs that did rather well in today's trade amid a sideways consolidating market. Cipla was up roughly 1.5% on the back of a Citi note coming in, where they've maintained their buy rating with a target price of 1,800 rupees per share. So that's roughly the stocks that were worth highlighting. Of course, we have a whole host of stocks, and Gaurav will be joining us later on the show to tell us about which stocks were big winners and losers today. But lastly, before we move on and keep the discussion going with our guests, just another news flow to highlight today. Karnataka is looking to hike duty on iron ore. This is what our sources tell us. And on the back of this news flow, NMDC was a stock that was deeply pressured, roughly 6 to 7% cut coming in on NMDC on an intraday basis as well. But that's what the market is round up to be like today. Let's keep the discussion going ahead with Nilesh, Jain, Head of Derivatives and Technical Research at Centrum Broking. Nilesh, hi. Thanks so much for joining us on the show and speaking to us on ET Now. Give us your sense on where you are seeing the markets headed, because fourth consecutive day of losses, you have the benchmarks that are falling, broader markets are falling. Amid all of this, surprisingly, the VIX is rather stable. So what are you making of the market sentiment right now? Are the bulls in charge? Are the bears taking over? What can we make of this? Because on one hand, indices are falling, on the other, VIX looks steady. So what sense can we make from this move?
Very good afternoon too. Absolutely. So today was a day where we have seen a kind of a selling. Yesterday again we saw across the board selling. Today Nifty has breached below its crucial support level, which was placed at 24,300. That's 21-day moving average that has been taken off decisively on the closing basis. So that is not a good sign. Overall, the market breadth is slightly on a negative side. It looks like Nifty is heading towards its 200-day moving average that is placed at 23,800. So before that, we have a psychological support as well, which is placed at 24,000. If you look at the derivative data, of the weekly FN expiry expiring tomorrow. The data shows that 24,000 is the strike on the put side where a lot of put writing can be seen. At the same time, 24,500 where the call writers are very much active. So that's the 500 point trading range, at least from this week's point of view. And I won't be surprised if we see any strong rebound from here towards 24,300 to 24,400. As you have rightly pointed out, VIX has cooled off today after 2 days of spurt. So it is trading in the comfort zone at 14. I think if at all we see any further fall in the IVs, that will provide more comfort to the bulls. But as of now, the index, since on the closing basis, is not a good close for the Nifty and Bank Nifty. Bank Nifty, which is leading the entire fall, the structure of the Bank Nifty is not looking that promising. It has a very good support at 51,700. So from current level, there is still room for another 400, 500 point on the lower side. So better to stay away from taking any contra bet on the index as of now. Focus should be on stocks and sector specific move.
So you're saying banks are more vulnerable. We could see more downside, more pressure coming in on banks, and globally also we've seen Dow has been on a longest losing streak since 1978. Globally, the banks are underperforming, banks and financials, and so is what looking in India also. So which are the spaces where you feel the margin of safety? Are the defensives going to tread the volatility further? So the margin of safety lies with IT, pharma, FMCG.
Absolutely, Priyanka. You have rightly pointed out defensive once again back into action. Nifty Pharma Index. If you just pull up this particular index on the daily time frame chart, we have seen a strong rebound in the Nifty Pharma Index. Looking at the today's reversal candle, it looks like it is heading towards 22,500 to 22,700. That's the Nifty Pharma Index. It is on the verge of a breakout from a falling trend line. So within this space, counters like Dr. Reddy. Divi's Lab, Lupin, Sun Pharma, these are the few names that we are tracking on. Apart from that, Nifty IT index, which was trading at all-time high, although some profit taking was seen in the previous two trading session. So Nifty IT is something that is looking attractive given the kind of depreciation in the rupee that we saw. So IT index itself, within that space, specifically large cap stocks like TCS, Infosys, and SCL Tech. So these are the few names that are looking positive on the chart. So these are the sectors that are looking positive. We have seen more pain in NBFC space, financial space as a whole. So that's the sector where a lot of short buildup can be seen. So as of now, it's an avoid taking any contra bet on NBFCs, but focus should be on defensive.
Nilesh, thanks for all of those views coming in, but I believe you also have some specific stock-specific ideas for us headed into tomorrow's trade. Tell us what they are.
Right, so I have three buy recommendation. First of all, within consumption space, specifically liquor space, where we have seen a good spurt today. So Radico, where we have seen a strong move, the stock has hit a new record high. Radico, it looks like it is heading towards 2,600 and 2,630. So these are the target on the upside for Radico. Stop loss can be placed below 2,510. So advisable to buy on some dip. If at all we see some profit taking, that can be a good entry point. Apart from that, EID Perry, another good stock, good move today we have seen in this particular counter. It has hit a new record high as well. So these are the stocks which are constantly showing strength in the weak market. So advisable to buy on dip. EID Perry is looking strong for 1,020 kind of target on the upside. 958 should be the stop loss for the long. Apart from that, Star Health is something that is looking attractive given the kind of formation that we can see. A double bottom can be seen on the daily time frame chart. A breakout above 495 will provide a confirmation of this particular pattern breakout. And then on the upside, 510 to 520 could be the potential target. And the stop loss can be placed somewhere around 476.
All right, so subsectors of consumption and an additional stock, Star Health, what do you recommend at these particularly with this market setup? Thanks very much, Nilesh, with your view as well as your recommendations on the markets. Moving on, let's get you the word from the wise. We did speak to Ajay Srivastav today and we put up a question on two-wheeler space, especially to understand his view, what is he doing in this space. And he said that he will avoid sectors that are facing high competition and has an oversupply of products. Two-wheelers fall into that category. Let's listen in exactly what is his rationale for not buying or avoiding rather automobile space.
We are out of two-wheelers at this point of time. And I'll say to you, it's a market overly competitive. A lot of players sitting in the market. Price competition is intense. I think the flavor is going to, I'm not saying they'll do badly, but I think the opportunity to make alpha money out of a two-wheeler company is, I guess, limited. Sometimes somebody will do well, sometimes some do well. I don't like companies, industries where there's too much of competition, oversupply of products, and limited, and you all focus literally on domestic demand. Now, those three things, just like what happened to the paint business, you saw what happened. I think two-wheeler is headed for severely competitive pressures in the next 12 months. And therefore, your ability to make returns out of it is going to be very difficult. Everybody wants to launch EVs, everybody wants to launch premium motorcycles, everybody wants to do everything. So 6 companies competing for a space in a domestic market growing at 6-7%. That's not a good recipe for shareholder wealth. So I think it's out of bound at this point of time. They did well for us. It's out. We exited it. And I don't think we're going back to it in 2025.
Okay, that's the word coming in from Ajay Srivastav. But while we have been talking about the markets, we also need to keep in mind that the global markets have also been seeing some downward pressure. The Dow Jones has marked its longest losing streak in over 4 decades. Meanwhile, back home, the Nifty has been volatile over the past few sessions. That makes you wonder if there's a correlation between both of these indices. And Kunal and Nikunj are standing by with the charts of both of these, the Dow as well as the Nifty, to break down and see whether there's any correlation between the moves of both of them.
Markets are also pausing for a breath, and has Dow reversed? That's something which we would be talking about. So Kunal, first let's understand that we always say that Dow is the mother market and Nifty in a sense has always enjoyed a strong correlation with Dow. So let's understand that this straight line fall in Dow, what it means for the Nifty.
Well, absolutely, yes, Nikunj, and the stat is very, very interesting. So we'll start off with understanding the Nifty setup, and then we'll move on to the relation of Dow and why Dow has a very severe impact and a strong impact to the Nifty trends. Now, this is the recent charts for the Nifty 50. As we can see, that the September top which we made for the index 26,200 approximately, from there we corrected almost 3,000 points. The pattern was that we formed a bearish head and shoulder pattern. The 3,000 point fall led into a 1,500 point rally for the index, which is the classic 50% retracement. So in every market trend, 50% and 61.8, these are two retracement trends where the index takes a pause. So the last 1 week, the reason the Nifty has been unable to surpass 24,700 mark is that we've come back to that 50% retracement. We are taking a pause over there. Now comes the second and the most interesting part, which is what's happening across the mother market, which is Dow. Now, over the last 8 or 9 days, we've seen a successive price correction for Dow. But the most interesting part is that the last 12-15 years of data indicates that there is almost a 96 to 97% correlation with respect to the Nifty and the Dow. Which
that's what we're capturing here, that Nifty has to mirror Dow, that's it.
Nifty
last 12 years.
Exactly. Last 12 years, we've seen that data. So there are phases where the correlation could aberrate, could diverge, but then overall, on an overall basis, we've looked at the divergence and the correlation, which is very, very strong. Now, the most interesting part is this trend analysis for Dow over the last 12-13 months so far, end of 2023. And we've gone through a very classical kind of a trend. We've come back to that lower end of the trend line, which indicates, and now we are heading to the Fed event, which means in case if there is a bounce back, it may not be just a minor bounce back for the Dow, but it could be a bounce back which could take the Dow back to its lifetime high levels of 45,000 mark. However, if we break below this major trendline support, then we are looking at a reversal for global markets as well as for our market.
What is that number for Dow?
So that's 43,300, 350 approximately.
43,300 broadly, right? 43,300. If Dow goes below that, then we have a problem on our hand.
Correct.
But as of now, your trend analysis seems to be indicating that Dow is nearing a support. Since Dow and Nifty has enjoyed a very strong correlation, Nifty is unlikely to fall, and yesterday's fall is unlikely to amplify itself into snowball itself into a domino.
Perfect, absolutely right.
Okay, so an interesting conversation wherein they both are trying to put forward the correlation between Nifty indices and Dow moves. We stay for a short break here. More to come on the other side of the break. We get you the derivative data as well as the buzzing stocks of the day. Don't go anywhere. Welcome back. You're watching Your Trades on ET Now, and let's get you the action from the derivative space. Of course, we were in for a more of a consolidation or maybe a pressure trade, what we saw yesterday also. And similar move we saw right from the start, the indices started to trade with the pressure, and then we were vulnerable till the strikes like 24,100, 24,200. These are the strikes where the maximum of the put buying happened, and higher calls like now 24,300, 24,400, they are being sold into now. They seem to be the resistance. So VIX was stable. There was a clear cut. There was no volatility in the market. Clear cut move which was towards the downside. What we saw on the derivative space, experts were voicing about it till the time we're not up above 24,500. We might see more of pressure, and that's what we saw today also. We've closed below 24,200. Let's see. We were able to actually manage somehow, Snehi, closing above 24,000, above 100 DMA, which was giving a good psychological support. But that seems to be missing now. So let's see. We are more vulnerable right now. Lower strikes are getting sold into.
No support level being seen, Priyanka. That's some point of worry coming in for the market. But let's talk about the big story of the day. Let's pull up the charts of NMDC because that stock has ended under pressure. A 6% cut coming in on NMDC today, and that's on the back of the Karnataka government news flow that they may be looking at increasing import duty on iron ore. Let's take it across to my colleague Prakash Priyadarshi for all of these exclusive details. Prakash.
There's a very significant development coming in as we are learning from our sources that the Karnataka government is mulling to increase duty on iron ore. In fact, the process has been initiated, and we are given to understand that the state government will take final decision very soon. Along with that, as you are aware, that the state cabinet has already approved the Karnataka Mineral Rights and Bearing Land Tax Bill, where iron ore has been separated from the list of forest goods. Technically, forest goods are exempt from duties. Therefore, state cabinet has decided to remove iron ore from the list of forest goods. Eventually, it will pave the way for the state government to put additional duty on iron ore. Of course, it will help a government to generate more revenues going forward. It is important to note that the Supreme Court had already granted states to collect mining taxes retrospectively from 2005. A very significant development coming in. Of course, the mining rich states will exercise their rights. Most importantly, Karnataka plays a very significant role when it comes to iron ore sector, where it accounts nearly 78% of India's total reserves.
All right, that's what the impact we saw also on NMDC. Thanks very much, Prakash, for bringing that details on this particular news. IT and pharma, of course, they've been gaining on the back of rupee hitting the fresh new lows. Now, rupee again hit a new fresh low today, 84.93 against US dollar. We did speak to experts on this. We spoke to Anindya Banerjee, who's the VP for currency derivatives from Kotak Securities, to gather what is he has to say on the factors affecting the Indian rupee and where it is headed next. Now, listen in.
If you look at the Indian rupee's performance for the entire year, we have been an outperformer. It's down around 2% against the US dollar. On average, the emerging market currencies have dropped anywhere between 4 to 6%. Even the Chinese currency is down 2.5%. So it is primarily the global macro, especially with Trump. Now, we have the America First policy. We have also uncertainty on the trade tariffs, etc. So that's the reason why dollar is doing well, and also the expectation that inflation might rise in US from next year onwards because of a very loose fiscal and monetary policy. A very strong consumer. So all of these are global macros which are supporting the dollar and hurting the emerging market currencies. And we have also seen a good bit of outflows from Indian equity markets, and that has continued. And that is also exerting a downward pressure on the Indian rupee.
Okay, word coming in from Anindya Banerjee of Kotak Securities on where he sees the rupee headed next is after this new fresh record low against the US dollar. But on that note, then let's revisit some of the stocks that were big winners and losers in today's trade. And to do that, my colleague Gaurav is joining us. Gaurav, take it away.
Well, yes. Let's begin our list today with VA Tech Vava. Now, this company was in focus and the stock was down. And the reason being that during its filing, company said that their order worth 2,700 crore rupees of desalination plant in Saudi Arabia got cancelled. Other than that, Aditya Birla Real Estate was also in focus because one of its wholly owned subsidiaries recently acquired a land parcel of 71 acres in Boisar for 104 crore rupees. RITES was also in focus because this company recently won an order worth 122 crore rupees from Meerut Development Authorities. Other than that, there were some stocks which were buzzing on the back of the brokerage note. So first we have is Cipla, where Citi actually maintained its buy rating and a target price of 1800 rupees. What they said is that company recently applied for US FDA's approval for one of their drug, which is likely to get approved soon. And once this drug gets approved and the generic application comes through, they say that the inflow of around 80 to 140 million dollars can be seen in revenue every year. And as a result, we saw some uptick in this counter. And lastly, we also have Coromandel, which was in focus because Nuvama upgraded the rating to buy and also hiked the target price to 2,347 rupees. What they have said is that the disciplined allocation is something which is helping the company. And lastly, they have revised their EPS estimate for the company upwards because company said that EBITDA can grow almost by 40% in coming quarters. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we saw throughout the day.
All right, thanks very much, Gaurav, for all those list of stocks and the reason behind them. Thanks very much for watching, viewers. That's a wrap on this edition of your